What is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Wednesday, March 1st, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
Beautiful day in the neighborhood up here in Bear Country. It is a great day.
Yeah, you had the water company out here all day. Did you finally get your water leak fixed?
No, they need a backhoe. It is so bad that it's bad. So the answer is no.
Well, you keep attempting to survive out in the middle of nowhere. I will enjoy indoor plumbing here in Dallas. You do have a great show for us lined up today. A highlight of the stories we'll cover. First, Tesla's Germany plant is producing 4,000 cars per week, 3 weeks ahead of schedule. That is awesome news for any Tesla shareholders that like to know that. Next, substantial doubt. Hydrogen truck maker Nikola on the brink of collapse after racking up $2 billion worth of losses. I know Stu will just speak specifically about the hydrogen aspect, but that's an absolutely incredible story. Next, we've got China's coal power plant approvals surge, challenging climate pledges. China is just cranking out those new coal plants. So Stu will dive into what's actually happening over there in the East. Next up, radical but durable paradigm needed for the delivery of low carbon energy infrastructure in a race to net zero. This story, as Stu says, weaves on into everything we've been talking about from a grid standpoint on, if we want to get to net zero, obviously these low carbon solutions are going to be needed, but the infrastructure needed to get there is critical. So Stu will cover what the race to net zero looks like there. And then finally, Stu will talk about Atlantic LNG to lay off staff. That's not good whenever you see that, but it's a sign of the times, I guess, which is pretty interesting. He'll kick it over to me. I'll talk quickly about what happened in the natural gas and crude oil markets. Good news out of both. And then we'll quickly cover the Baytex Ranger oil M&A deal that dropped. Well, really last night, Reuters had an article that dropped late. And this morning, the press release dropped that Baytex Energy will be buying Ranger Oil in a very interesting Canadian company now dipping its toe into the Eagle Ford Shale. So I'll cover some of the highlights and my initial reaction there. And then we'll let you get on out of here. So I think we got a great show lined up. Before I kick it over to Stu, guys, just again, check us out online, www.energynewsbeat.com, the best place for all your oil, gas, and energy news. We're hard at work at our new dashboard. So check us out, dashboard.energynewsbeat.com. It's our combo news data. Again, hard at work at V2. We'll see how it goes. But Stu, I'm out of breath. Where do you want to begin?
Okay, let's start with Tesla's Germany plant. I'm actually quite happy about this because I do like Elon, and I'm very happy for the Germans with this. Might as well make it off of a American company. Tesla's Germany plant is producing 4,000 cars per week, 3 weeks ahead of schedule. This is pretty amazing, Michael. Tesla will be compelling $25,000 electric vehicle that is also fully autonomous, Elon said this time. Wow. After an ugly start to the 2023 campaign, Tesla shares have now more than doubled off their lows this year. It's kind of cool.
Yeah, I mean, it's pretty incredible what Elon Musk has been able to do. First off, I think, I don't think the autonomous driving really gets doesn't get talked about as much. You talk about Tesla. I think everyone talks about the electric. They talk about the batteries, the clean energy.
Right.
I mean, really what's going to make Tesla valuable is will they achieve what would be considered full self-driving or FSD? Who knows? But if they do, it's licensable software that can be licensed to any other company, and all you need, and they really become a software company. And I think Elon knows that. And I've listened to enough podcasts with him, specifically in the Lex Friedman show, where he's basically gone so far as to admit that Tesla is a software play and eventually might even be outsourcing and not even produce cars, but just produce software that goes into cars. But for now, they do make an incredible car. It's clearly not $25,000 for a electric vehicle. That's a lie. I think it's what, at 45, 50 now. It's at least double that.
Oh, it's way more than that. But the original idea for affordable Tesla was announced by Elon back in 2020. Tesla will make a compelling $25,000 electric vehicle that's also where is it? It was leaked from the company's California plant. So nice. Okay, let's go to the next one. Michael, I hate it when you're right. And I really even hate it worse when I'm wrong, but I'm admitting that I was wrong. I'm a hydrogen fan. I think hydrogen on a ideological standpoint would be good. The title of this article is Substantial Doubt. Hydrogen truck maker Nikola on brink of collapse after racking up a $2 billion loss. What's a few billion between friends unless you're printing money? But if you're a business, it's really a problem. Here's a quote. We incurred net loss of 784 million and a 690 million for the years ended December 31st, 2022 and 2021, respectively. We've accumulated a deficit of 2 billion from the inception. You can't hang on with that. I mean, that is absolutely horrific. Here's the problem. The ability to access the equity distribution and agreement and second common stock. Oh, no, that's not it.
I'll tell you what the problem is. The problem is that the company was founded by Trevor Milton, who has been convicted of fraud for lying to investors, specifically about Nikola. So, I mean, there's tells you all you need to know, Stu.
But the part of the problem is from the technology standpoint, it would not work. So fraud's there. So,
fraud is fraud there from an underlying technology standpoint, or is fraud there because what Trevor Milton did, which was claim something existed when it didn't? That's fraud. Does them working on the underlying infrastructure make? No, I think it's just bad business. I think they've incurred $2 billion of debt. We read in here that it expects to spend between $580 and $705 million of cash in 2020. So you're looking at 2.7 billion and no prospects of future revenue, because remember, Ernst & Young, who did this audit, said specifically, where is it in here? We believe we will continue to incur operating and net losses each quarter until the time at least we begin to generate significant margin from our trucks. And they obviously say, which may not happen, but the key is these trucks are high margin. So big expense up front. Hopefully we can then kick it in with some high margin stuff. I mean, clearly I don't think this is going to work.
No, our limited operating history makes evaluating our business and future prospects difficult and may increase the risk of your investment. You think?
Put it all in Nikola, baby. What's next?
Okay. But part of this is also because of the problems with hydrogen. A lot of things came out. We'll go into that later on a different show. China coal plants approvals surge, challenging climate pledges. Michael, this is actually a fantastic story on a horrific topic. And how can I get to that kind of a paradigm? It is really sad. Let me get to the number here. And it is approvals were given to build 106 gigawatts of new capacity, roughly 9 times Singapore's total power electricity.
That's insane.
That's the highest number of permit approvals since 2015. Listen to this. The new capacity, if it was all built, would equate to 106 power plants of 1 gigawatt each, the average size. The coal plant capacity started construction in 2022, total 50 gigawatts. This is 6 times as much for the rest of the world combined. And it is also more than a 50% increase from 2021. They've been fast tracked. Here's the thing: China is by far the largest producer and consumer of coal. It is also the top greenhouse gas polluter. For example, a new 1 gigawatt coal plant, averaging the utilization rate of Chinese plants, will emit, Michael, are you sitting down? 3.2 million tons of CO2 per year, the annual emission rate of 695,000 cars. And that's what they're charging their electric cars with.
But it's clean, right? It's clean energy.
Man, here's the thing. Okay, we have spent trillions around the world trying to go greener. We're trying to get to carbon net zero. We're trying to do this. And there's absolutely no way the world can get there with China.
Well, yeah,
No way.
I mean, it's
insane.
If you think the United States can cut emissions enough to impact quote unquote climate change,
nope,
yikes.
Not a bit. We're not even the top 10.
Well, what's next?
Okay. As you calmly, that thumping that our fans on the podcast heard was your head hitting the desk. Atlantic LNG to lay off some staff. And this is sad. We hate anybody getting laid off. As recent global events have been demonstrated, the LNG industry is dynamic. They shut down one of their trains. They have 4 trains, and they are now down to 3. And it's because the limitations of the exports that are going on right now. Atlantic is one of the largest producers of LNG and is owned by the National Gas Company of Trinidad and Tobago and Shell, BP, and the Chinese Investment Corporation. Michael, here's a tidbit. Guess who Boston and New England, the story we had yesterday on New England Power, they buy from this company.
No. Of course they do.
Oh yeah, I just thought I'd share that a little bit of laughter. Okay, I'm going to the next one here because that little nugget cracked me up. Radical but durable paradigm needed shift for delivery of low carbon energy infrastructure in race to net zero. This article is trimmed with hypocrisy. Part of it is because it was based off of the IEA's findings and their doctors and everything else. And the head of the IEA is absolutely, I'd like to say smoking crack. Can I say smoking crack on the podcast? I think
you just have to admit that you smoke crack too.
Oh, okay. Well, anyway,
That's
Princeton University.
That's a joke, people.
Here. Yeah, no, I don't. By reinforcing the extent of the challenge, Worley and Princeton University and Linger Center for Energy and the Environment provide a new set of net zero numbers using data from a Net Zero Australia. This is much smaller energy economy than the US, but with greater energy exports requiring up to 3,000 gigawatts of renewables by 2050. Replicating the world would be a renewable current fleet up to 1 gigatera of CO2 sequestration. Bull hockey. Anyway, the reason I went through this was because people are fabricating numbers. And when you read something like this, it goes into the bull hockey category. And I just wanted to give a shout out to the IEA as running potential investor of the week. This is bull hockey.
Yeah, I mean, this whole report, what they're basically saying is oil and gas companies should take all the money that they know how to deploy in oil and gas and deploy it in an industry that they have no idea how to actually manage,
and
as seen by BP. So they want oil and gas to fund the transition to eventually bring them down. I mean, it's insane.
but they also gave some horrific numbers, Michael. They said that the oil and gas industry had $2 trillion worth of subsidies to the oil and gas industry. They are smoking bad on that one.
I mean, globally, 2 trillion? I don't doubt that number if it's globally, Stu.
How?
Oil and gas, you know this better than anybody. There are some great tax benefits to investing in oil and gas, Stu. You think they're just available to the retail investor?
Hang on, but they didn't print any money. There's a difference between tax credits and printing money.
But an oil and gas company has significant tax savings because when you deploy capital.
Not all over the world, they don't have tax credits.
Well, here they do. Here in America, they do.
We're not the rest. We are the only one in the world in that has tax credits for, and also
it says that in the article here. It says 4 trillion of subsidies. Where does it say that?
I said 2
trillion. Does it say that here in the article?
Yeah, I gotta go.
Let me find that, because that is crazy.
I've already closed it. Let me go look.
Because I'm looking at it right now. I'm not finding it. I'm just saying, like, and I agree with you, but to say there are no tax advantages to oil and gas
globally, no, there are tax advantages. That's different than subsidies. The infrastructure bill is subsidy.
That's okay. Yes, right there. Another recent analysis shows that fossil fuel consumption subsidies rose to a record of over 1 trillion as governments acted. Blah blah blah. So that's interesting. But a lot of the times, what they're doing is a sleight of hand by saying subsidies, when really what they mean is tax benefits. Which is
the rest of the world does not take advantage of tax benefits like the U.S.
So I'd be interested to read that analysis. But when you say subsidies, you got to generalize it a little bit. So you're right.
We're both right.
Yeah, I'm just making sure, because there are some benefits to investing in oil and gas. Speaking of anybody's listening, holy smokes!
Not globally.
Yeah, not globally. You're right. What's this last story here?
I'm done.
Oh, we're good. Well,
it's off to you.
It's off to me. We don't have any tax subsidies in this segment, unfortunately. Only in Stu's segment.
I only said subsidies. I didn't say.
I know. I'm just giving you a hard time. Overall market's down. S&P 500 dropped about 0.3 of a percentage point. NASDAQ tumbles about 0.1 of a percentage point. Again, markets are just oddly waiting for the Fed to drop its latest rate increase. Street thinks it's going to either be 25 or 50 basis points. Me personally, I think it'll be 50. I think they're really going to try to, with unemployment continuing to stay low. I think the housing market is still a little bit higher than what they originally wanted. I think they're going to take one more swing in it. But we'll see what happens there. Crude oil traded up to almost $78 today, currently now $76.50, which is about 1.2 percentage points higher than it opened on the day. I think you're going to see a lot of conflicting news. You're going to, on days that crude oil goes up, well, it's Chinese demand. On a day it goes down, oh, well, it's interest rates. I do think there are investors expecting some strong Chinese manufacturing data, which drops in 2 days. Again, the IEA coming out with this report, amongst others, in sort of their monthly end of the wrap, has sort of buoyed the demand on China's side. But, again, when you're reading these articles, guys, you got to be mindful of the fact that, they're going to pick a narrative depending on which way crude oil went. I mean, it's the last day of the month. You could easily say people are just settling up. Contracts roll over on a month-to-month basis. is this anything than people just covering up their positions? That's probably more likely what happened if it, in terms of what's going on. So, but I do think on the China side there, traders are really eyeing that report to see, how that manufacturing data looks. Again, the same thing really over on, natural gas, $2.75, which is actually a little bit higher than it had initially been trading at as of the market open. We record this here about 6:49 on the night before. I think, again, while it's been a little bit warmer in the short term, we do see a long-term front coming in again with the end of the month contract coming up. I think you're seeing a lot of just quick covers. Again, what's the long-term outlook really? 3 to 6 weeks looks like for natural gas. I don't know. Again, this cold front does seem to be moving in, which will help buoy prices. But again, with Freeport beginning to ramp up, it has done really nothing to support prices here. So I doubt getting even that 2 BCF online is going to do much. We're still very oversupplied on storage, which is going to be interesting in what happens this summer when we go to theoretically fill, and what do we do if we can't put it where? I mean, it could be a very interesting summer, Stu.
It is, but China just put out a notice or there was an article yesterday that LNG, China is going to change the paradigm this summer with them buying as much LNG as they can possibly get.
We can't ship it though. We can't ship it enough. Like, yes, we can send them some LNG, but what I'm talking about is in the summer, we're going to have so much abroad that we might have to do some crazy, or not abroad, at home, due to the fact that we don't use as much natural gas in the summer. So we fill storage in the summer. Well, if we haven't drawn down as much as we normally do, demand is still lagging behind what we expected to it, at least here domestically, and maybe not lagging, but not as, we're still slowly increasing from where we were at pre-COVID levels. I could argue there's a situation in which we run into oh my goodness, we don't know where to put all of this gas. And you see regional gas prices like Appalachia and West Texas specifically really get tight and really get to the point where things get. So, I don't want to go, I've gone from extreme bull telling you it's going to be $12 to now I'm telling you it's going to be $1. So don't believe anything I say.
That's like me and hydrogen.
Somewhere in the middle. I'm couching it.
Yeah, it's like me and hydrogen, dude.
Yeah. Hopefully none of us get accused of fraud.
Well, 2 years ago, I was a big hydrogen dude.
Yeah. No kidding. We also see U.S. crude stockpiles projected to rise 6.2 million barrels. That's what, according to the API, you'll know tomorrow, Wednesday, as you guys listen to this, exactly what that EIA reports. We'll make sure to cover it on tomorrow's show. Specifically, I think the only other finance deal I think is be interesting to cover is Baytex Energy announced, really leaked late last night, that they were going to go ahead and acquire Ranger Oil, which is a U.S. Eagleford company. And this morning, here on the 27th, they went ahead and made it official. I'll read you some of the transaction details to give you an idea. Including the assumption of a debt, it's about $2.5 billion. To give you guys an idea, I don't know what the mix is. Oh, here's the mix. So basically, Ranger shareholders, it's a completely stock deal. It's pretty interesting, actually. It's we'll get into what I think about it, but you're looking at an all stock deal. Ranger shareholders are getting 7.49 Baytex shares plus 1331 cash. Excuse me, it's not all cash. It's a mix of cash and stock for a total consideration of about 44 and 36 share, which is only a slight increase or multiple on their current share value. So it's a pretty, I don't want to say meager valuation, but there's not, if you're just looking at a pure valuation play, Baytex is getting a deal considering where their stock is trading at relative to the $44, and considering that it's only 13, a little less than, it's basically about 30% stock or cash, 70% stock. So, I mean, from a cash perspective, if you're Baytex, you're able to keep a lot of the cash and really shift a lot of the, obviously equity, but that's again, a non-cash transaction to kind of give you guys an idea. They're going to go ahead and increase their share because of this. They're going to introduce a quarterly dividend. This is something that Baytex, which is a Canadian company, has not done before. Comes with about 741 net undrilled locations, somewhere between 12 and 15 years. I mean, we'll see. I love how one of the key highlights they put in here is creates a more resilient and sustainable business. Who got that put in there?
IR guy of the week.
Exactly. One of increases their exposure to the U.S. Gulf Coast pricing. Because remember, where's Ranger located? They're Eagleford. So I mean, this is the latest Eagleford play, and it's very interesting. There have been all of these deals that we've seen. We saw the Chesapeake deal. Chesapeake's getting out of the Eagleford. We've seen multiple deals now happen of big oil players. Veritas came in. About a year and a half ago and really kicked off the ex-Felix team. They really kicked off the Eagleford with their $800 million acquisition. The Eagleford has flipped hand multiple times. This is the latest in a string of deals. My initial reaction is, again, Baytex was obviously looking to get into the U.S. oil market, clearly, because of whether or not they believe it's the next place to create value for their shareholders, or they know something about Canada that we don't know. And I think the truth may be somewhere in the middle. Their ex-CEO, who's now the chairman of the board, Ed LaFleur, Mines alumnus. So he's clearly knows what he's doing. We trust everything that's going on. No, I'm just kidding.
Considering Trudeau is a bad guy for Canada, that's...
I mainly say that facetiously, and is initially I think Baytex gets a little bit better of the deal. Depending on, obviously Ranger has been, Reuters announced in November that they were exploring a sale. So they obviously shopped themselves around and felt like this was the best deal for them. So I guess the question is, because Ranger was backed by Juniper Capital, who is, they were looking maybe for a more equity style deal than cash. Maybe a lot of the deals they had in front of them were cash, and maybe the cash was a little bit more maybe attractive because the multiple might have been a little bit higher, but the goal on the back end for Juniper was, and if you read the press release, where is it? It was up. Oh, I had it up here. Here we go. Eric Geiser, chairman of Rangers board and managing partner of Juniper Capital. This transaction represents a leap forward in shareholder value creation potential and accelerates both shareholder return strategies. What does that mean? Yes, they really wanted a stock deal, because what does this do? This adds another layer that they can use in order to, whatever their partnership structure looks like. Clearly, equity was something they've either pitched to their client base or is something that they see as a huge component to diversify themselves from just looking at, say, a large cash outlay and then figuring out what to do with it. Maybe they don't want to have the problem of wanting to do with all this cash. They want to be able to sit back and cash flow these dividends. And maybe part of the deal was, we sell to you, you start a dividend now, and we collect. That very most likely, again, this deal just happened. That's probably where this deal's headed. So again, this is where, you could say it's a great deal for Baytex, but in the same breath, say it's a good deal for Ranger. Maybe that makes a good deal overall. You can make an argument from both sides. I think it'll be interesting to see how this deal plays out. Specifically for Baytex. I mean, now they're in charge of operating the Eagleford asset. They better hope that a lot of these Rangers guys stick around and they're not just cashing out. But I think that's the other part with these full M&A deals is what happens to the staff there. Is a lot of them going to stay? I mean, they'll probably offer a lot of them jobs. Are you going to, migrate your headquarters down from Calgary? Probably not. But, I think a lot of those decisions are going to be critical to how this asset gets developed. And again, we'll only know in 2 years. So we'll know, we'll know in 2 years. So stick around then and we'll fact check us then. That's all I've got, Stu. Do you got any thoughts on this deal?
I personally think that the employees would stay here because of the Canadian work issues going back and forth. if we try to go work in Canada, you got to have somebody from Canada standing there looking over your shoulder. So I feel good that the Ranger employees would be here.
It's a Mountie. He's going to be on a horse with a Labatt's Blue.
Hey, I got to do what I got to do to pay
Hey.
bills, baby. All right.
Anything else they need to watch out for today, tomorrow, this week? What's on the schedule?
I got a few leads, but I'll shock people tomorrow.
Your sources. All right. Well, with that, guys, we'll let you get out of here. Get back to work. Finish up your day. We appreciate you checking us out on the world's greatest podcast, Energy News Beat Daily Stand Up. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow. Maybe.